Hey everyone, Emily here. Welcome back to Stock Stories. Today we're diving into a fintech name that's been making waves in the SMB space, BILL Holdings, ticker symbol BILL. If you've ever wondered how small and mid-sized businesses manage invoices, payments, and all those back-office financial workflows, chances are BILL is right in the middle of that process. Let's break down what they do, their recent performance, and what the future might look like for this stock. So, what exactly is BILL? Think of it as the financial autopilot for small and medium-sized businesses. Instead of handling invoices manually or cutting physical checks, BILL's cloud-based platform automates accounts payable, accounts receivable, and payments. It also connects with suppliers and customers, creating a kind of network effect. And here's the cool part. They're layering in AI to make financial operations even more seamless. Now let's talk numbers. In their most recent quarter, BILL actually beat Wall Street expectations. Earnings came in at 53 cents per share, topping estimates by 12 cents. Revenue, $383 million, a bit ahead of what analysts were expecting. The split is interesting. Transaction fees grew almost 18% year over year, while subscription revenue only ticked up about 5%. So most of their growth right now is being powered by more payment volume flowing through the platform. For the full fiscal year ahead, BILL is guiding for about $1.6 billion in revenue, which represents 9 to 11% growth. Not hyper growth, but still solid in this environment. One thing investors like about BILL right now is cash flow strength. They generated over $300 million in free cash flow in the past year, which is more than their net income. That's a very positive sign because it shows the business is generating real cash, not just accounting profits. On the balance sheet, they've got around $2.1 billion in cash and investments versus about $1.6 billion in debt. So, they're in a decent financial position. And guess what? The company also announced a $300 million share repurchase program, which usually signals management is confident in the business. All right, let's hit the highlights. BILL's got a strong product market fit with SMBs who desperately need automation, recurring revenue from subscriptions, and growing transaction volumes. A sticky ecosystem thanks to their supplier and customer network. And they're leaning into AI, which could improve efficiency and give them an edge over competitors. But of course, it's not all sunshine. There are a few risks investors need to keep in mind. Growth is slowing compared to past years, and margins depend on their take rate from transactions, which can fluctuate. Guidance for the next quarter was softer than expected, and that spooked some investors. Competition in fintech and payments is intense. From traditional accounting software like QuickBooks to new payment platforms, BILL has to keep innovating. And since they deal with cross-border payments, currency fluctuations can hit results. So where does Wall Street stand? Analysts are generally positive, with average price targets in the $59 to $60 range, a modest upside from today's price around $53-54. Some models even say BILL is undervalued by over 30% if growth stays steady. But remember, fintech stocks tend to be volatile, so you have to be ready for swings. Here's my view. BILL is a really interesting fintech plus SaaS hybrid. It's not growing at 40% anymore, but it's still scaling, throwing off cash, and now buying back stock. That's a strong combination. For investors, I'd classify it as a growth stock with risk. If you believe in the long-term trend of automation in small business finance, BILL is a solid pick. But if you're looking for stability, this might not be your safest bet. So, what do you think about BILL? Is this the kind of fintech you'd add to your portfolio, or do you think competition will eat into their edge? Drop your thoughts in the comments, and don't forget to hit that like button if you found this helpful. I'm Emily, and this was your stock story for Bill Holdings. See you in the next one.